Hi, fellow investors. In today's video, I will walk you through a process on why Apple stock is a great investment in the midst of a bull market. This stock is continuously contributing massive income for Warren Buffett's portfolio, and I am sure it will work to your portfolio as well. In a nutshell, my brief presentation will cover the following. First, let's have a short market scan to determine the market is right now and where it may possibly be heading. Second is the fundamental analysis, followed by technical analysis of the stock. And finally, I will show you how to trade this stock. If you find this video informative and useful, please like, leave a comment, share, subscribe to this channel, and hit the notification bell so that you will be prompted by our latest stock analysis. Without out of the way, let's get started. The stock market has been bullish since the beginning of 2021. The three indices are just 1.5% below their all-time high. The S&P 500 registered the highest growth at 27%, followed by Nasdaq at 25%. And finally, Dow rose by 19.4% since the start of the year. As a result, the volatility index has dropped significantly by 39% to 16.4%, as investors were optimistic about a grand opening of the economy after months of lockdown courtesy of COVID-19 pandemic. For the year, the market has experienced the first and much expected correction from the onset of September to mid-October. The Dow plummeted by 5%, Nasdaq dropped by 9%, and finally S&P fell by 6% after the tumultuous month of September to mid-October. The market recovered in earnest from the last 2 weeks of October until today. As the saying goes, trees don't grow straight to heaven. There will always be some patches of volatility along the way for a healthy correction to put more stability to the market. Why is the market bullish? There are four major reasons why the market is bullish. First is the robust corporate earnings. In the second quarter of the year, about 90% of S&P 500 have met earnings consensus according to FactSet. So far this third quarter earnings season, about 81% of S&P 500 companies have beaten earnings consensus expectation, also according to FactSet, despite ongoing supply chain disruptions, labor challenges, commodity inflation, and COVID risk. This is the primary reason why stock prices have skyrocketed. Second is the projected growth in GDP. The U.S. economy grew by 6.7% annual pace in the second quarter, while it rose by merely 2% annualized in the third quarter. The National Association of Business Economics forecasted the growth of 5.7% in 2021, while most economists expect that the U.S. economy will grow by 4% in 2022. Third is the dovish policy of the Federal Reserve. It has been purchasing bonds in the market to the tune of $120 billion per month since the onset of the pandemic to prime the economy. And lastly is the strong consumer demand, which was triggered by several stimulus packages that were unleashed to provide life support to the ailing economy at the onset of the pandemic. The upward momentum of the stock prices till the end of this year is being threatened by the following factors. One major factor is the supply shortage. We are all familiar with shortage in gas, semiconductor chips, labor, and even food supplies, among others. Analysts are saying that the problem on the supply side may persist up to the mid of 2022. Given this scenario, inflation will continue to be a headwind. Inflation at the moment is at 6.2% versus target of only 2% for the year, the highest in 30 years. The main reason for high inflation is the hike in gasoline prices, which sent prices of basic items skyrocketing. To combat inflation, the monetary authorities will have no option but to hike interest rates sooner than later. The Federal Reserve has already started to taper purchases of bonds by the end of this month up to July of 2022, where we will see gradual increase in interest rates thereafter. Higher interest rates will lead to high cost of funds for businesses, and that will slash operating income. Another important threat is the slow growth in China's economy. China's economy is beset with power shortage, supply bottlenecks, COVID outbreaks, debt problem in real estate sector. When China's economy weakens, demand for American products will also go along with it. Apple is an American corporation that has a history that spans over 45 years. It designs, manufactures, markets smartphones, PCs, tablets, wearable, and accessories and services. It is number 2 in market capitalization of 2.5 trillion. It is number 3 in 2021 Fortune 500 lists. Apple's net sales in fiscal year 2021 ending in September grew by a hefty 33% to $366 billion. All product lines posted huge increases, with Apple accounting for a huge growth of 39%. This can be attributed from introduction of new iPhone models in the first quarter and fourth quarter of 2021. iPhone now has installed base of about 1.6 billion devices, and it is estimated that around 44% of current iPhone users are ready to upgrade to the newest iPhone. Apple has about 745 million paid subscribers, up by more than 160 million a year ago for its Apple Music, Apple TV Plus, iCloud, Apple Arcade, Apple News Plus, and Apple Fitness Plus. The next growth driver are services and wearables. In addition, Apple is also looking to make a self-driven electric car and could produce an autonomous vehicle as early as 2024. iPhone is still the flagship of Apple Inc. It accounts for a huge 52% of the total revenue in 2021. Services is the second most important sales component of Apple's ecosystem, comprising about 19% of total revenues. In recent years, these sectors showing significant growth patterns. Products under this sector include advertising, Apple Care, cloud, digital content, payment, and other services. Other products have shown ample growth but remain stable as a component of total Apple's ecosystem. As can be gleaned from the table, Greater China market posted the highest growth in sales of 70% in 2021. Europe, Japan, and the rest of Asia Pacific have growths of over 30%, while American market looks saturated with a growth of only 23%. From this chart, one can see that China is a growth prospect for Apple because of its huge population and higher rate of acceptance by the Chinese consumers. Apple's liquidity is healthy with huge operating cash flow of $104 billion and free cash flow of $73 billion as of end fiscal year September 2021. Apple's cash reserve is much higher compared to other tech titans like Alphabet and Microsoft. However, its debt-to-equity ratio of 2.16 times is the highest compared to Alphabet and Microsoft. However, should Apple decide to pay off its debts using the free cash flow, its debt-to-equity ratio will drop to 1:1. As of November 12, 2021, Apple's P/E ratio stood at 26.36 times. This is considered overvalued, but when compared to Alphabet and Microsoft, it's a lot better. Alphabet's P/E as of last trading date is 29 times, while Microsoft is 38 times. Using Microsoft's P/E ratio as a benchmark, Apple stock could bump up to about $207 per share. Using the daily time frame, Apple stock prices are trending up and forming an uptrend channel for the last 12 months, as can be gleaned from the chart. Since the first trading day of January, prices grew by 16% from $129.41 to $150. The current price of $150 is in the middle of the range and somewhat consolidating lately between $142 to $153. Currently, the last trading price is above the 50-day and 200-day simple moving average, which is considered bullish. RSI is 55.65, indicating that the present stock price is neither overbought nor oversold. The only downside among the indicators is the MACD, which is within the signal line, indicating a consolidation between $142 to $153 a share. If it breaks the 153, then the price may hit the upper rail of $162, which is our target price by year end. If you're an aggressive investor, the buy point is at 147.15, meaning buy the dip. And if you're conservative and you think that the price may further drop, then the next buy is 142. Should the price move higher from the last trading price to 162, then the next buy point is above 162. Later on, I will show you the risk reward on each buy points. Using the weekly time frame to confirm, the chart tells us more or less the same story as the lower time frame. Overall, trend is up and range bound. MACD is below the signal line but sloping upwards and may intersect the signal line soon, which is a bullish indicator. In summary, based on fundamental, Apple has relentlessly introduced innovative products. Its customers are loyal. It has higher sales from advertising and App Store and cloud service. It will focus on autonomous vehicle. It is profitable with huge cash reserves. It has 85.5 billion shares repurchased in 2021. It has payout ratio of 16.31% versus Google of 0. Its stock is relatively cheap versus Google and Microsoft using P/E ratio. It is 42% of Warren Buffett's portfolio. On the technical side, we are in the bullish financial market. Trend is up for short to long-term hold. Price is above the 50 and the 200-day SMA. RSI at 55.65, indicating not overbought nor oversold. There are three important risks facing the market right now, and these are chip shortage. This is an old problem with no immediate fix at the moment. The US is too dependent on overseas sources for the supply of chips. To alleviate the situation, the federal government is considering a 50 billion chip act to build a domestic chip industry, and Taiwan Semiconductor Manufacturing Company is building a plant in Arizona to alleviate supply issues in the United States. Apple is also beset with a lot of legal challenges that may materially affect the financial condition of the company. To mitigate this risk, Apple has obtained insurances for these legal cases to lessen the impact on the company's financial. If China's economic condition deteriorates, then this will have a significant impact on the revenue of Apple. How to trade this stock? If you're an aggressive investor, your buy level is $147.50. Target price is 162. Stop loss is $141. Your risk reward ratio is 1 is to 2.5. On the other hand, if you're a conservative investor, your buy level is $142. Target price is the same as 162. Stop loss is $135. And your risk reward ratio is 1 is to 3. In other words, this trade offers 2.5 times to 3 times more potential upside than downside. As a disclaimer, this information is issued solely for informational and educational purposes and does not constitute any offer to sell or a solicitation of an offer to buy securities. For my closing, I'd like to leave you a word of wisdom from one of the best investors, Benjamin Graham. The investor's chief problem and his worst enemy is likely to be himself. In the end, how your investments behave is much less important than how you behave. Thank you for listening, and I'll see you again next week for another stock feature.